Well, welcome to our newest installment of Your Market, My Market. I'm here with Jeff DeLarme, Certified Financial Planner. Welcome and thanks for joining me, Jeff.
Hey, Amy, good to be here.
And we wanted to kind of look at the mid-year 2020 in light of COVID and the first crazy months of the year. We have 5 points that we want to kind of hit for you. And I would like to kick it off with your permission, talking about, is the market defying gravity? It's sort of like a pinball machine around here. You'll tell us about the financial markets, but in real estate, we had a very solid up 44% January year over year, up 22% in February. Mid-March, the governor closed the state. So we were half good, half weird. Then we were down 44% we were down 25% in April and down 38% in May. And now it looks like June is going to be even year over year, 2019 to 2020. So it's been a bit of a pinball for us in the real estate market, but I think that we have very low inventory and we have very low interest rates. And so there is opportunity even with all of this chaos. How are the financial markets?
It's pretty crazy. So it's been one heck of a year. We saw one of the worst quarters, first quarter. Second quarter is one of the best quarters we've seen in almost 20 years. So for better or worse, that's sort of the nature of the financial markets. But I'm often reminding clients right now that, the market and the economy are two very different things. They're related, sort of like siblings from the same parents. They're related, but they sometimes behave very, very differently. And so it's an interesting time to be sure. But again, if we're investors, not traders or speculators, I think we can take a little bit long-term view, but certainly feels like we're defying gravity, right?
That's an interesting, speculators versus investors. Can we talk about the seasonality of the market? I don't know if financial markets have seasonality, but I know that one of the things that people talk about in real estate is the spring market being the best time to sell a house. Well, our spring market was certainly an odd time to sell a house. And if you watch the Rose Parade, you see that Southern California weather doesn't have seasonality like other areas, but we're kind of seeing a spring market in summer, which is really never happened before. So that's kind of interesting. And it's also interesting that you're seeing different search criteria with people staying in their homes. Their homes are becoming their hobbies. They're doing home projects. They're searching for things like a home office, like a backyard. So maybe they need another bedroom. They're homeschooling. They're working from home. So it's really interesting because I think it has definitely brought to light people's personal changes being in quarantine we're in our 10th week, I believe, if I count correctly. How about for you in seasonality?
Yeah, well, it's certain that this virus has changed our daily lives and a lot more people working from home. And I suspect that after we hopefully have a vaccine and things go a little bit more back to normal, that more people will continue to work from home because it's worked. But in terms of seasonality, so there are a few different adages that get thrown around my part of the markets, which is the January effect that basically says that January tends to be a strong month for the markets because people are recommitting to their financial New Year's resolutions to save more, and they're filling up their 401ks, starting the year on a good note. There's sell in May and go away, because historically they say that there's some weaker months to come. But I think the biggest thing that we can agree on is that this is, the mid-year point is when a lot of retail and institutional investors will rebalance or reconstitute their portfolios, meaning they'll sell some poor performers or maybe some positive performers and take profits, and they'll do some buying. And so you see a lot of activity around this time of year as people sort of get their portfolios ready to go for the second half of the year. But that's not a reason to really deviate from a long-term investment plan, but it is something seasonal to your point.
And that's probably a good thing for all of us to maybe do at this point, right? Is to kind of recalibrate.
It's always a good time to rebalance your portfolio. I sound like a broken record, but I think, especially after the quarter that we've had, it's a really good time to make sure that you're invested how you wish to be.
Great. So I also wanted to talk about technology because technology is transforming my business, and I think it's having some impact on yours as well. I know that now we're doing a lot of things virtually that we never did before. There was about a 2-month period where you couldn't show a home in person. So we have Zoom showings, we have 3D Matterport virtual tours. I'm doing meetings with buyers and sellers like this on Zoom with, I had parents in Palm Springs and kids in Brentwood and, people all over the place that were calling into our Zoom calls. So that's been definitely a change. And we're also having, ultimately a home is something that you're going to have to see and touch, but we're doing a lot of the upfront legwork all virtually. So that, and I believe that it has helped some of the technology stocks this pandemic. Am I wrong?
Yeah, no, it's interesting you bring that up. So, part of the reason why people are kind of shaking their heads saying, gosh, how can the market be rallying so much when the economy is reeling? And, what I think a lot of people don't realize is that when you look at an index like the S&P 500, it's weighted most heavily towards the largest companies in the US in this case. And what you're finding is that those largest companies happen to be technology. In fact, I believe that the largest 5 companies are all technology stocks. And it makes sense that those are doing really well right now because we, to your point, are relying on technology more than ever. And so it's interesting when you look at the markets and you see that it's really being led by these technology giants. So no, good point.
Which would be like Facebook and Google and Amazon and what am I missing?
Little one called Apple. Yeah, there are a lot of all the big companies that we use, every day. Yep. So
another little one.
Yep. So it's just, it's still diversified, but when the top 5 are technology, you sort of say, oh, well, that makes a little more sense as to why things have come up so much in a short period of time.
I'm wondering what you think the longer term ramifications of all of this federal support and the low interest rates might be. If I can jump in first, I personally am doing a refinance on my house to, capitalize on lower interest rates for the longer term. And I am definitely thinking that the opportunists are out there, the ones that have courage and the ones that have money are definitely jumping in. And the other thing that I'm seeing is multi-generational, a lot of parents helping adult kids put the down payment on the houses. It's hard to save 15 or 20% down. And I'm seeing a lot of parents that have benefited from these upturns, helping their kids get into houses that they want them to be able to enjoy while they're still here. So that's my kind of long-term. I'm seeing a lot of people being able to do more with these lower interest rates. How about you?
No, I think you're absolutely right. I'm seeing it too. I'm seeing a lot of clients refinance. It's actually funny. I'm doing my first refinance in 5 years, and it's just, rates go low enough, you sort of say, you got to do this. And so, I think the potential negative impacts going forward is that as individuals and companies and governments take advantage of lower rates and they refinance, is there that chance that they will lever themselves too much and put themselves in a more or a weaker position in the future? And I think that's always sort of a concern. So I know for me, as it comes to building a portfolio, I think it's one more reason to try and skew towards higher quality companies and to diversify, because you, as we saw with COVID, you just never know when a certain industry will get taken out. And so you want to make sure that if you are investing in companies that are taking advantage of a lot of leverage, that you're diversifying and that you're sticking to the most quality names that you can find. The other thing I worry a little bit about is, as the government prints so much money, is inflation. And we really haven't seen anything on the inflation front for almost 10 years, maybe longer. And so I do worry that one day that will come back, and we'll have to deal with that to be sure.
And I think also another point that occurs to me is that with all of the federal government support, those monies haven't run out yet, but the people that are in positions where they've had to close businesses. We of course had the civil unrest in LA on the heels of being ready to open up again after 2 months of not being able to do business. So I worry a little bit about if there's going to be a tumble effect at some point from all of those programs coming to their ends and then people having to repay. Oh, and I guess it also occurs to me that our taxes are going to be due here July 15th, right?
Yep, we've got extended tax deadlines, which are now right in front of us. It's it's going to be interesting. It always is interesting, but right now there are just so many things going on, not just with this country, but worldwide. And but again, I think we have to kind of refocus and say, are we investors or speculators? If we're investors, I think we need to remember that we're investing for long term, and in a lot of cases, it's 20, 30 plus years, whether it's real estate or stocks and bonds. So I think that's important to keep in mind.
I think the last thing that I really wanted to touch on was the do-it-yourself mentality. I know that I've had some people that love to do it themselves, and I feel like in this marketplace, it's worth investing in a professional, because I think sometimes the risk is not evident until it's too late. So I just had a situation where somebody used a discount agent and took a very large hit on what they should have netted. Have you seen any of the do-it-yourself, e-traders having any problems?
Yeah, so it's interesting because normally I'll do a second opinion service for prospective clients because they maybe weren't happy with their existing advisor or something happened to that advisor. It's pretty rare that we would get do-it-yourself investors, but in the last couple months, we've seen a huge influx in the number of people that were really doing a very capable job of managing their own portfolio, but just everything going on right now has caused them maybe some doubt. And it's interesting that we sit down and we review things, and I'll say your portfolio actually looks pretty good, but it's all these planning considerations, things that really aren't specifically investment related, that maybe they didn't have the expertise or the knowledge or the experience to take advantage of. And so, I think it's a little self-serving and trying to be as objective as possible. I think, most of us, when it comes to, serious investments or large purchases or significant decisions, I think a lot of us can benefit from just having a second set of eyes and a sounding board, if nothing else. And I think that's where I know I've tried to add value, and I think that's what you do for your people that you work with.
And most people are bringing us very large sums of money. I mean, in my marketplace, we're never talking about less than $1 million asset, if not multiple to $3+ million. So have you had any horror stories, or you don't care to share?
Yeah, well, I mean, I certainly wouldn't give names, but I mean, it's just, even if it's not millions of dollars in a portfolio, you can make decisions or mistakes or oversights that end up costing tens of thousands of dollars, and oftentimes it's too late. And but I think having a plan and doing the planning with a professional, whether it's again your investment portfolio, real estate acquisition, whatever it is, I think just having a trusted professional that has experience there can go a long way.
I agree. Anything else that you care to share for the good of the order?
Yeah, I just think, we were talking about it before this call, that there's I believe it's an African proverb out there that says, calm seas don't make skilled sailors. And these are really challenging times. I would argue that we're always going to have a reason not to invest, or a reason to maybe not buy that next house, and wait for things to get better. But the reality is, markets, as they say, tend to climb a wall of worry. And so I think that, we're going to get through this. We're going to get through a lot of the challenges before us. And again, if we're investors, not traders, I think better days are ahead. So I'm going to stay positive. I hope you do too. And
we're here to both help you not capsize, right?
Yep, that's right. Do our best.
I so appreciate your time. Stay well. We wish you all a good third quarter, and we'll see you on the next round.
Look forward to it. Thanks, Amy.
Likewise. Thanks, Jeff.
Bye.
Bye.